here today with this specific webinar because we are pretty aware about the effort that Nordic banks are doing in the open banking sector. The banks are investing a lot in this area, and with this session we want to share the experience as CRIF, Enable Banking, and Strands are bringing to the market to support this world and these new trends related to the open banking. In the agenda, that we will have 3 speeches. So let me introduce a little bit, then they will provide for sure a better presentation of himself, but we will have as a first speaker Sarah Hager. She is the Chief Commercial Officer at Enable Banking, and will share with us how technology, innovation, and regulation will unlock new opportunities in the open banking sector. Then Alessandro Vilardi, that is the EMEA and Asia Digital Director at CRIF, and is one of the open banking leaders in Europe. And Alessandro will share with us the best practice for financial institutions, as well as the use cases on risk mitigation strategies. And last but not least, Craig Harris, Sales Director for Northern Europe at Strands, and Craig will showcase the transformative power of open banking, digital innovation, and tailored approaches for retail and small medium enterprise customers. So, as I mentioned, you will have the opportunity to leave to post some questions in the chat box. So, and at the end, we will try to answer to your questions. So, let me assign the control to Sarah in order that she can start her presentation. Sarah, the floor is yours.
Thank you very much. And there we go. So Sarah Hager is my name. I will speak a bit about open banking, a topic that I'm holding dear since 2016 when I came in contact with it for the first time. And what I find the most fascinating about this topic is the impact that it can have in different business processes, in how it can improve the situation for customers, how it can improve the risk levels, how it can improve the commercial success for different companies. And before I go into to open banking, I wanted to share a few words about Enable Banking. Enable Banking is an open banking aggregator in its simplest form, and we are viewing ourselves a bit like NVIDIA, the company working with AI, a company that is not necessarily visible in every process, but is powering very powerful processes. And the second part that is very different from us in comparison to other players that are working in the same space is that we operate like a FedEx. That means that whenever someone wants to fetch account information from their own accounts, then we're helping them, but we're helping them the FedEx way, meaning we're picking up the parcel at the bank and then we're bringing it into the application of choice. In Enable, we are operating with 2 different products, the account information service and the payment initiation service. We're helping companies to fetch account information data and to initiate payments. That's shortly about us as an introduction. In banking, where I spent the first 15 years of my career, we see how the pace is accelerating. The change is continuously accelerating, and the fraudsters are finding new ways. And at the same time, banks needs to find new ways to ultimately stop and prevent fraud. And we also see how banking has been changing a lot in the last few years. If we look back on a quick note to see how it's been changing, the banking has been going from face-to-face operations in the branches into web banking when internet arrived, further on into mobile banking when we got the first smartphones, and now in the 2020s we're starting to see API banking, meaning the end interface is not necessarily any longer owned by the banks. And most importantly, that end interface and the data that you get to feed that end interface, whether it's an online net bank or similar, that data can be combined with new data sources to combine and to create new products. And by getting the access of open banking into different products, it's possible to make them even more attractive for the customers and to gain completely new values. And although we are still very much in the beginning of the API banking shift, we're already seeing a huge change in the Nordics. A bit about what we're seeing on the market and what kind of different products we are seeing, and the products that are mature on the market right now. Of course, we've seen aggregation for a long time with different banks. Debt collection is something that is growing very fast right now, but also the pre-lending and the affordability checks. And I think my absolute best example of when you're in need of a affordability check or a pre-lending check or even a lending check based on open banking is when you move countries. I lived for almost 5 years in Germany, and as I moved back home to Sweden again, I couldn't even get a credit card. And when I wasn't able to get a credit card, although I was employed by a bank and I had been sent out by that same bank to Germany and then back again, I didn't have a credit history. So if open banking would have been existing back then, I would have been able to give access to my German bank accounts, and it would have been possible to see I'm eligible for a credit card. Same goes for anyone who's switching jobs. If there's someone who's losing their job or is getting a new position with a better paycheck, that's information that you can't see in the credit checks. So why is then open banking growing in importance right now? We see a few different perspectives on this. Of course, you have the regulatory perspective. We got the PSD2, and now we already have the PSD3 as a draft. We have PSR as a draft, and we have FIDA as a draft. And in different documents, I've already seen how there are mentions of PSD4 and FIDA 2. So we can rest assured that the regulatory perspective is going to continue to grow, and the regulatory importance is going to continue to grow. The second very interesting factor that we see on the market is how the customer perspective is changing and the customer demand is increasing, because more and more consumers and more businesses are discovering and they love different solutions based on open banking. Sometimes they don't know that it is open banking, but they're using several different services for it. And if you look at it from the internal perspective, from the bank perspective, then you can also see how more and more product departments are looking into offering products that work or utilize open banking as an enabler. And they want to add open banking into their products to give it a new dimension, to add even more value for their customers. And finally, also, of course, the partner and the investment perspective. Several financial institutions are looking into both partnering and investing in different fintech companies because they see the value that these different companies both would provide their portfolio, but also how it would provide them value that they will be able to offer continuously to their customers. Soon we have open finance ahead of us, and that will give us access to additional data sources. Today with open banking, we have the account information, meaning the transactions on our accounts, bank accounts. Later on, we will get the mortgages, the loans, the savings, and the investments to get a full picture of who is the customer that we have on the other side of the screen. What are their habits? How are they saving? How are they investing? In what are they investing? Are they a high or low risk person. And one thing that I love a lot is something I call innovation through combination, meaning a lot of products, when you add something new into it, that can become a new innovation. A very common example and a very simple example of this is how Apple turned their iPhone into an iWatch. So you basically have the watch. They're combining the watch and the processors and the tech from the iPhone and simplify it a bit. And suddenly they have a completely new product just by the simple combination. And now with FIDA, we're getting a lot more combinations that we're getting the possibility to add into our new products, where we're also able to create new experiences and give complete new value to the customers. And this is something where I see a huge potential in when you look forward in a few years. Another very interesting thing that is ongoing right now on the markets, and especially interesting for banks, is the unbundling and rebundling. How different companies and completely new niches are moving into banking thanks to open banking. We have seen the traveling giant, the traveling booking system Amadeus, who is now securing themselves the open banking licenses AISP and PISP. We see several accounting companies who are launching open banking services and who are wanting and willing to invest time and power into these processes in order to be able to offer more services to their customers. We even see, interestingly, logistics companies who are launching different banking services based on open banking, as well as big retailers who are moving faster and further into open banking. And I think with the pace of change, the accelerating pace of change that we've been experiencing now throughout the last few years, we can expect to see even more verticals moving into open banking. And we can expect to see even more companies having curiosity of how open banking might be possible to benefit their operations. And with that, I say thank you very much for listening. And I will give the presentation further on to
Alessandro. Thank you, Sarah. Thank you very much for your speech. So, Alessandro, the floor is yours.
Thank you. Thank you, Sarah. Thank you, Claudio. Let me start with my presentation. So, why we are talking about open banking, generally speaking? Because open banking is about data, okay? And data are CRIF obsession, as a matter of fact, and we are working since the very beginning of the PSD2 regulation in terms of building new services for credit, for financial institutions, for banking, and not only banking, of course, based on this new kind of data, which is something that we called new transactional data, okay? So, as a matter of fact, as long as we are a data-driven company, the open banking part is a key pillar of our value proposition. And to be more specific, we have different use cases, different open banking-based products, which are related to 4 out of the 5 traditional pillar of the customer journey, meaning that we are able to provide value when adding open banking data for the customer onboarding part, for the loan origination part, for the customer management up until to the collection. So we have, and this is also what I will present to you today, we have different use cases, we have different experiences and projects running with some of our customers on how they can leverage on open banking data in order to, for instance, optimize their existing origination process, reduce the risk, or also, in some cases, exploit new business development opportunities into their existing customer base. Okay, so sorry, there's a little bit of delay. The main area of using, at least according to CRIF, of course, the main area of interest when using open banking data is to raise the level of knowledge of bank and financial institutions customers. This is not something new. I mean, every single bank, of course, is currently dealing with their transactional data. Okay, so the transactions of their customers are already used by, let me say, every single bank in the world. The thing is that usually every single bank takes a look at this data in a standard way, a standard approach. What I mean for standard approach? I mean, they usually take a look at the amount, take a look at the balance, take a look at the date of the transaction, okay? Or, of course, if it's in an ingoing or outgoing transaction, but nothing else. What we strongly believe is that the real value of the transaction is hidden in the unstructured part. And this is the what we call that the advanced approach in dealing with transactions from the bank perspective. There are a lot of super useful information that are already present in the transactions, but they are not so easy to use due to the fact that there is no standard, say, in writing this kind of information into the transactions. So, what can be used to unveil this very useful information already present? Here helps something that is called categorization engine. So, it is an engine that is able to read every single transaction and to categorize this transaction at several and different levels. Okay. But why categories are relevant? So diving into the categorization engine part, why categories are relevant? Let's make a very simple example. I do have a transaction, a POS transaction at H&M in London, in 19th of October 2022. If I use the categorization engine, I'm able to read from this transaction and to assign a macro category, which is shopping, and also a micro category, if, of course, the categorization engine is robust enough to provide this kind of information. So, from a single transaction, I will not see only the amount, the date, and the place where this transaction has been done, but I'm also able to understand what my customer did. He or she bought clothes at H&M in London, and this is something that can be revealed only with a categorization engine. Our categorization engine is able to create more than 200 categories for consumer and more than 170 categories for business. This is let me say, a job where size matters. Why? Because the more categories are able to be created by categorization engine, the more detailed the information will be. So, as a matter of fact, more data and information will be available to the bank in order to take their decision, for instance, in granting a loan, or as Sarah made a super practical example, the new to credit, new to country. So in every case where there is no traditional data source to be leveraged, the financial institution can use the current account data, getting the information in a structured way. Once the categories has been created, okay, then it's a matter of creating value on information. So creating analytics on information. And here we're talking about a brand new set of information and data upon which a new set of analytics can be created. Why this KPI, this analytics suite is important? Because it's we demonstrated during the year that this new KPI and analytics that can be created upon this new data are very useful in terms of assessing the risk of the customer portfolio, monitoring this risk, but also empowering KYC strategies and operational procedures. To be mentioned is the part of the cross and upselling strategies. So remember the fact that thanks to a categorization engine, the bank or any also corporate, so it's not only about bank, but everyone who is asking the consent to the final customer to access their bank account is able to get additional information on their spending habits, okay? So they are able to understand whether, for instance, he may have a passion for, I don't know, technology, or is addicted to digital service subscription, so on and so forth. So the bank or any other institution is able to create a new set of services and products, not necessarily by themselves, but also leveraging on partnership that matches 100% to their customers' needs. Sorry, it's a little bit of delay. Okay. So in terms of sizing, our analytics suite is able to create more than 270 categories for credit risk assessment, both for business and individual, always starting from the transactions gathered from every single bank account of the customer. We do have also a macro division between our family of analytics, so risk and cash flow, early warning monitoring, collection, upselling, and cross-selling. Let's go straight to the point. Some use cases, some real example. The first one is very simple. Is the significance, the account significant? What does it mean? How do we know from the raw data that we can get from a bank account if this is the main account owned by the customer, or it is a secondary or let me say a dead bank account? Well, taking a look at the transactions, but not only in the standard approach, so number of transactions, amounts, so on and so forth, but also looking for specific kind of transactions, which is something possible only when we are able to exploit the real value of the transaction, the hidden part, the unstructured part, thanks to the categorization engine. Then we are able to create a very simple index which says this is the primary bank account of the customer, or it is not. Some of our bank customer use this significance index in order to understand whether their customer, mainly SME, okay, mainly SME or business corporate, no matter the dimension, is using the bank's account as the primary one. So they are paying the bills, they are paying the personnel, the salary of the personnel, so on and so forth, with this bank account or not. And of course, we are also able to understand the relation between how it is used, a bank account for a certain customer versus the other bank account owned by the same customers. Another example is, let me say, the king of the example. Okay, so how the analytics, the KPI part, based exclusively on transactions, can help in the disbursement. So we're talking about the origination part, mainly in combination with other traditional scores or data. So in certain European countries, there is something that is called the credit bureau. So we demonstrated that using the transaction-based score that we are able to provide in combination with the credit bureau score, this combination has an impact in terms of both granted loans, keeping the same bad rate, and the impact on the credit risk, keeping the same reject rate. What you can see is two examples for both consumer and business in terms of additional granted loans, keeping the same bad rate, which is key, otherwise it's completely unuseful, which is roughly 10% for business and 7.5% for consumer. On the other side, the impact of the credit risk, so keeping the same reject rate, it's minus 12% more or less for consumers and minus 3.3% of business. Then, of course, we have the Gini index, but it's something which is important, but for us, no more important than the real evidence that we can provide in terms of granted loans and credit risk impact. Last but not least, another way our customers are using this analytics tool that we provide upon transaction is in terms of improved time to debit. What I mean, we demonstrated, taking a look at our KPI, we do have a specific KPI for this, okay, which is called best time to debit, that if the actual day of direct debit is in a range of 2 days over our suggestion, okay, the bad rate is 2%. Whenever the actual day of direct debit is out of range, and we mean more than 10 days over our suggestion, the bad rate grows by 10%, become 2.2%. When it's super out of range, so over 10 days, this becomes 2.3%. So we demonstrated that the calculation based on current account transaction and specifically which is the best time to debit has also, again, a direct correlation with the bad rate of an existing bank portfolio. I think that just to make a sum, we are not talking about new data, okay? We are talking about exploiting existing data in order to get additional information. And upon this additional information, which is the unstructured part of the transaction, we can build real value using our analytics skills and capabilities in order to do what? To create a new set of KPI and analytics that are very, very useful in order to prevent the risk, and sometimes also prevent the fraud, and we do have also, by the way, experience in optimizing the collection phase using open banking data, and again, thanks to our categorization engine and the analytics suite that we can build upon this. I think it's all. So I've seen some questions and we will provide the answer at the very end of the session. So I leave the stage to Craig and thank you for your attention.
Thank you, Alessandro. By the way, we have already some questions also for you to be answered at the end. If you have any other question, please write down in the chat, and let me pass the control to Craig for the rest of the presentation. Thank you, Alessandro.
Thank you, Alessandro, Sarah, and Claudio. So whilst I'll wait for the virtual WebEx baton to be handed over, firstly, let me say good morning and thank you to everyone that's joined this webinar today. An introduction to myself, my name is Craig. I am part of the team here at Strands, where we focus on empowering financial institutions like yourself to better serve your customers through innovative technology and thoughtful data-driven insights. My own background is in helping banks, businesses, organisations of all kinds in navigating complexities of the financial landscape, with a particular passion for making sure that technology truly serves the people who use it. Today, I, as the rest of the panel, are excited to share with you some of the ways that we are working to transform the banking experience, not just by improving financial outcomes, but by fostering a deeper, more meaningful relationships between bank and its customers. The baton is still being passed around. This is like the Great Britain Olympic team, so hold the phone, please, callers. When the slide decides, and now it has. All right, so start by, I suppose, explaining that every customer, as you probably know, or as you will know, every customer is on their own unique financial journey. Some are just starting out, and some others are seeking to more refine their approach. At Strands, we see our role as a guiding light, a lighthouse, helping individuals navigate these paths with confidence. Our commitment isn't just to provide tools to banks and institutions, but to ensure that every customer truly feels supported and empowered to reach their financial aspirations. Our journey as a company has always been about making meaningful differences in people's lives. Strands' presence around the globe, reaching millions of users, reflects our ongoing commitment to reducing financial stress and helping people feel more secure about their future. Behind every statistic is a personal story, a life that's been made a little bit easier and a future that's been made a little bit brighter. This is what drives us as a company, as a group, and it's what we hope we can bring to your customers as well. In today's world, it's not enough just to simply connect with customers. What we need is to create interactions that truly resonate. By transforming data into meaningful insights, meaningful interactions, we aim to foster deeper connections, helping customers feel understood and valued. It's about creating experiences that are not just reactive, but proactive, anticipating needs and adding value every step of that journey. A case study that I will start with before going into deeper is when we partnered with Credit Agricole in Poland. The goal was simple. It was to create a banking experience that truly centers around the customer, which is a common theme that we get asked all the time. The project was more, though, than just about technology. It was more about fundamentally changing the way customers interacted with their bank, making them feel secure, informed, but more importantly, in control of their finances. The recognition of the best banking app in 2023 was a very proud moment for both parties, but the real achievement actually was in the improved lives of people who used it every day. Much like the use case in Georgia with Bank of Georgia, what this allowed us was to witness firsthand how well-designed digital experiences can transform customer relationships and lives. The number tells a story of increased engagement and satisfaction. But behind these numbers, as I've mentioned before, are thousands of individuals who now feel more confident and capable at managing their lives and their finances. This is the kind of positive impact that we are striving in every single partnership and relationship. However, we do believe that managing money should be a process that feels empowering, not burdensome. This is why our approach goes beyond the basics, introducing elements that engage and educate customers in ways that resonate deeply with them. This isn't just about functionality, what's right at the time. It's about creating a financial experience that customers can feel connected to, one that makes managing money a positive and empowering part of their daily lives. And in a fast-paced world, the ability to respond quickly to the ever-changes and needs in the market, such as cost of living crisis, is absolutely crucial. And our brand, or our broad range rather, of features is designed specifically to be rapidly deployed, helping you meet customers' needs where they are, with what they need, when they need it. It's about being adaptable and responsive, ensuring that you can always deliver experiences and that resonate deeply with your customers. Financial health itself it isn't just a single milestone. It's a journey that evolves over time, with different needs and challenges at every stage of every life. Customers today seek more than just transactional support. What they want is a partner who understands their personal financial story and guides them through it. This slide is a great example of what is possible when you combine capabilities with consistent, personalized approach of financial guidance. Imagine a customer starting their financial journey with us, and feeling supported every step of their way, from the first savings accounts to planning to retirement. This kind of consistent, empathetic support isn't just beneficial, it's transformative, building a relationship that's based on long-term value. This approach not only strengthens customer loyalty, but their overall financial well-being, which is their and our ultimate goal. This is more than just a service. For us, it's a paradigm shift on how we are thinking about banking. Traditionally, as you will know, banks have been seen as institutions that customers turn to when they need to manage their money, often with the focus of transactions rather than relationships. But imagine a world where the bank is a partner in every sense of the word, there to help customers navigate through the challenges of living paycheck to paycheck, as we see in this example, reducing their financial stress, providing a clear, actionable guidance to improve their financial health. This represents a completely new way of thinking for the market. We're not just offering a tool, we're fostering a fundamental change in the customer and bank relationship, being proactive in identifying potential risks and providing personal support where customers not only manage their finances, but also reduce uncertainty and stress, which is about being there through life's struggles, offering not just financial solutions, but peace of mind. The unpredictable world and the ability to foresee challenges and prevent them before they impact your customers is invaluable. With our advanced predictive analytics powered by CRIF, we offer a way not just to react to issues as they arise, but to anticipate them. This approach is about creating a safety net for your customers, allowing them to make informed decisions with confidence that their bank is out looking for potential risks. The level of foresight is a game changer, and it provides real value by customers avoiding financial pitfalls, which in turn strengthen their trust and reliance on you as an institution. Imagine being able to alert a customer before they encounter a cash flow problem, or guiding them away from a financial distress before it even becomes a crisis. This is the future of banking, a proactive, protective relationship that ensures customers feel all supported at all times. And the value is clear. It's about turning potential risks into opportunities and deeper engagement and trust. The benefits we aim to achieve are holistic, supporting both customers and institutions in meaningful ways. For customers, it's about feeling secure, empowered, managing their finances, but for institutions, this is about deeper relationships and fostering engagement, driving sustainable growth. When both sides thrive, it creates a positive, reinforcing cycle that everyone benefits from. But it's not just the retail sector that we serve. Small, medium-sized enterprises are vital to our economies, yet they often face complex financial challenges. Our goal with Compass is to simplify these challenges, providing SMEs with the clarity and the tools that they need to manage their finances confidently. By streamlining the financial management process, we help businesses focus on what really matters, growing and thriving in their respective markets. For small business owners, financial management, it can often be a juggling act with various tools and systems that don't quite connect. This can lead to inefficiencies and added stress. We aim to simplify these by offering an integrated approach by allowing businesses to manage all aspects of their finances in one place. This helps not only reducing the daily burden, but also empowering business owners to make informed, confident decisions. As a reference point on this matter, in the UK specifically, we're proud to be part of the CFIT programme, which is the Centre for Finance, Innovation and Technology, in collaboration with many of the senior stakeholders in the UK and a particular tier 1 bank. We embarked on a mission to better understand SMEs' needs and the data behind it. Leveraging our advanced technology, what we uncovered was quite significant. Reviewing the data, what we were able to feed back to the working group was that 50% of SME dropouts could have successfully secured a credit offer had they completed the process with enhanced data sets. Remarkably, over 25% of SME loan applications now receive a credit offer without the need of human intervention. Thanks to our innovations, these not only enhances the operational efficiency, but also reduces the time and the effort spent on gathering and organising information from multiple data sources, which I've mentioned is an absolute pain for SMEs. So together with CFIT and the Tier 1 bank, what we devised was an innovative approach to enable automated data capture, leading to more informed, timely loan decisions. And this initiative offers vital financial support to businesses that might otherwise have faced friction in their applications. A solution that directly aligns to the UK's commitment to supporting to the business sector. However, the benefits of this approach should not be confined to the UK alone. The need to improve the SMEs is a global imperative, and by adopting these innovations, we can extend the support worldwide, empowering businesses across the globe to thrive. Every bank and SME has its own unique challenges and opportunities. That's why we work closely with our partners to develop tailored solutions that meet specific needs. Whether it's enhancing digital adoption, improving efficiency of financial processes, or goal is to help you deliver real measurable value to your SME customers, supporting growth and success in meaningful ways. Our work with HSBC is an example of how we empower SMEs to take control of their finances with confidence. By supplying financial management and providing clear, actionable insights, we've helped HSBC's customers achieve greater financial clarity and success, resulting in figures as you see below, 30 million in loans, 200,000 new customers. This is a testament of what's possible when businesses are given the tools they need to thrive. With Banco BPM, in today's interconnected world, small businesses need financial management platform that integrates seamlessly with every aspect of their operation. By leveraging open finance, we've helped to transform how SMB customers manage their finances, making their operations more efficient and their financial outcomes more positive. This isn't just about improving processes, though, it's about empowering businesses to reach their full potential in a complex and competitive market. What I will end on is just a quick overview of how these ideas come to place together in practice. And this is an overview of the platform that's designed to be innovative and accessible, putting the tools that I've mentioned, the powerful tools, directly in the hands of the business owners, with features that provide the clarity, the insights, such as account aggregation, cash flow forecasting, budgeting, invoice reconciliation, and more. What this is empowering the business owners and the banks is to manage their finances with confidence, making informed decisions to help drive their business forward. And again, this isn't just a financial tool. This is a partner in their daily operations, helping them achieve their goals and grow their business. And I am just on time at 9:50, so I will now pass that virtual baton across, unless there's any questions.
Thank you, Craig. And you're right. There is already some question for you, so we can start from you directly. So the first one, okay, you already provided some example, but there is a specific question about the customer experience. In which way, using this solution, the bank can improve the customer experience?
Yeah, okay, thank you, Claudio. So, yeah, I mean, I'll briefly touch on this, but obviously there's only so much information you can go when you're going through those slides and you've got 15 minutes. But to go a little bit more deeper in that, I think it's important to note that just going digital for the sake of going digital, it can be risky. Obviously, you have to have a clear understanding of the direction that you wish to go. But I think the CEO of Google once mentioned that successful digital products should be like a toothbrush, useful and ready to use every single day. And I think this analogy, it perfectly captures the essence of what Strands aims to achieve with its solutions in banking. I think digital innovation has undeniably shaped how banks engage with its customers. And with the one example that I mentioned before adopting Strands, a bank probably struggled to provide personalized financial advice at scale, resulting in lower customer engagement. But by implementing the solutions, including account aggregation, the bank introduced a suite of features, personalizing spending insights, budgeting tools, predictive cash flow forecasting and analysis. And these tools weren't just gimmicks, they became essential to daily utilities for the bank's customers, helping them manage their finances greater with ease. Whether it was helping customers save, understanding what they needed before they even contacted the branch or call center, what we were able to do was help them make that real difference. And what the impact of that was rather profound. Customer engagement had surged. The users had begun to actively interact with the bank's digital channel more frequently. They found real value in the personalized insights, the advice tailored to their specific financial needs, goals, and behaviors. So that not only boosted the customer satisfaction, but also increased retention rates. The customers were visiting the bank as a trusted partner in part of their financial journey rather than just a service provider. So I think embedding solutions, it creates a greater story, a more emotional story rather than just a transactional relationship. It builds that meaningful relationship between the bank and its customers.
Okay, thank you, Craig. And now there is a question for Sarah. And according to you, what will be the main impacts and opportunities related to open finance and FIDA? And what about the future about this subject?
It's a very good question, and it's also a very difficult question because it will depend a lot on what kind of company you are. If you look at the consumer perspective or user perspective, the consumer will be able to own their own data, and they will be able to share their own data in a much simpler manner than they are today. So in terms of mortgages in Sweden, for example, you're able to share what you have with a bank with a few clicks in a very simple manner, meaning competition will increase on that product. If you look at it from the bank's perspective, you can either view it in a protective way where you try to protect the existing business, or you look at it in a more predatory way where you have a look at how can you use this data for your customers to bring more value and more for your customers, and by that more business. And there are already several different ways that we see in the market how this is already happening. In Sweden, there are already open finance ongoing, you could say. There are insurance companies such as Insurely who are increasing the competition in the insurance space. There are a lot of loan providers that are bringing in the existing investments of the customers into the products, or they're bringing in the savings into account when they're offering a loan or a investment. So there's a lot of products that today are mainly available in manual matters, meaning they're mostly only accessible for private banking customers, but they will be with this available for any customer who has a savings account or a deposit account or a investment account. So there will be a huge democratization of the data and the services, because it's possible to digitalize them and to make them fully automated instead of having it done over the table, so to say, in an old-fashioned manner. If I look to the B2B industry, then open finance will also have a huge impact, but as in every space, a bit later on, because business to business is always a bit slower than the consumer space. So all in all, I see if we have seen a big impact now with open banking for the last about 5 years since open banking was created or established and went live on the market, so to say, we will see a lot more businesses with FIDA, and we will see how insurance companies are transforming themselves. We will see how investment companies are transforming themselves. And I see how ultimately this will benefit the customers, because the customer will hold greater power of what data they have and with whom they share it. And they are also getting the opportunity to choose what kind of services they want, services that we don't see yet on the market today.
Thank you, Sarah. And there is, I think this is the most relevant question, and this can be for Craig and for Alessandro both, is about the ERP integration part and how this data can be used and can be exploited in this context. I don't know if Craig or Alessandro want to start.
Let me make a very quick and brief sentence. Then, of course, Craig, please interrupt me whenever you want. I will not talk about, of course, the technical part of the ERP integration, but the thing is, let's imagine the invoice reconciliation. Okay, so taking all the information from the ERP and reconcile all this information with the transactions coming from the bank will let you understand how much cash do you have in now, how much cash will you have in a certain future. So Craig briefly talked about also the cash flow forecast, which is also king in this scenario. So the combination of data coming from the ERP in terms of invoice to be paid or to pay and the current account movement, the transaction, make it possible to make a very quick and automatic reconciliation in order, and this is very material mainly for the SME, also for an entrepreneur, in order to understand the cash, how much cash this company, this very small activity or entrepreneur has now and can count for the next 2, 3, 4 months based on the transactions plus the invoice. But then, of course, Craig, correct me or complement.
Yeah, thank you. I mean, there's so much that can be said here, and obviously being conscious of time. Anders, I think it was yourself, Anders Larsen, who mentioned the question. Please feel free to reach out to me after, and I can probably give a bit more of an in-depth conversation in regard to this. But in addition to what's just been mentioned, yeah, the lifeblood for SMEs is to ensure what money is coming in and what money is coming out. So what we try and do in that respect is remove the headache, the pain that it has in regards to the integration. So we work with several providers in that sense to automate the manual tasks, give that real-time financial visibility, improve accuracy and compliance, efficiency, the discrepancy management. It can be error-stricken, and obviously reduce savings and reduce or improve the scalability. So there's more things that I can definitely say, but again, in conscious of everyone else's time, I'll be more than happy to pick that up separately with you if that's okay, Anders. I am appreciative as well that you can't respond on a call, so my details will be shared after this.
Okay, so we are at the end. So thank you so much to the speakers, of course, to the attendees, of course, and to the attendees. If you have any question, if you want to deep dive these subjects, please feel free to drop an email to the contacts you have, and we are available to deep dive these subjects. Thank you so much, and have a great day.